Hi, good day. Welcome to Phillip Trading Podcast. I'm James, Phillip Futures Marketing Executive, and we are happy that today we have our special guest, Mr. Wong Kun Hao, with us. So, how are you being, Kun Hao?
Good, James. Very good.
Okay, great. So, Kun Hao, I will introduce you. So, Mr. Wong has more than 20 years of trading experience in the financial industry. So, he's an investment and trading strategist, has experience managing his own fund, and also he's the owner of the Raypedia Private Limited. So, he also a partner. He got also partner with Chicago Mercantile Exchange Group. We call it as CME Group. Okay, yeah, and Kunhao is often invited to share his view on the market and also provide trading insight with the industrial practitioners, like and also fund managers, proprietary trader, and so on. Okay, yeah. So again, thanks for joining our podcast, Kunhao. So I believe our audience will benefit after they join our today's podcast. Yeah. So today's topic, we're gonna talk about how to create trading plan for US indices. Uh, so actually, this is also the title for Kun Hao's upcoming webinars on 6th of April. So we have a QR code over here, the registration code for this upcoming webinar. So to scan it, okay. So Kun Hao, can you share about the preview of this upcoming webinar?
Sure. Let me just get the PowerPoint up. Yep. Give me a
Okay, yeah.
moment.
So I will make you as a host.
Yeah, you may want to enable me to do that. Yeah.
Yeah, right. Okay, you are the host right now. Hmm.
Okay. Okay, let me just go straight to what we're sharing coming Tuesday at 7 p.m. And according to Philip, this is a quick preview, and I hope that you'll get excited. When I prepared this, I myself got excited. So there's two parts to this, but if you have missed the first part, it is okay. So basically, the first part we talk about profiling because profiling it is so important. It may seem like a very basic topic, but it is also very important. Why? Because most of the trader got lost when they start trading, they got their position stuck, especially those that you may can associate this is that you have make some small earnings. Yeah, small profits here and there, multiple small profit, but one wrong trade, it kind of kill off the whole effort of the entire weeks or month or even years. So the problem with the part one, I addressed the problem why most of the trader face with this struggle is because they do not profile themselves. What they mean by profiling, it means that before you trigger that trade, you have to know what is it for. Is it for short-term trading planning or intraday trading planning? Of course, I can fine tune even further, but in short, I just want to describe to you how to give you an idea what is short-term trading. So basically, when you do a short-term trading, that means before you trigger that trade, you must have an idea how long you're going to hold this position. So if you have positioned this as a short-term trading, means that you're going to hold this position about between 2 days to 3 months. So you have a very clear idea before you trigger that trade that likely you're going to hold this position for the next overnight to the next 3 months. Now, so for this preview, I'm just going to talk very quickly about the short-term trading, but definitely during the actual day on next Tuesday, I'm going to describe more about the intraday trading. Just for this content, a short preview about what is this short-term trading all about. Now, I think you may have heard about this term called "trend is our friend." Now, so you do your best to identify where is the trend first. Say, for example, now the US market, it is still in an uptrend. I think all of us know that. The reason why is very simple because US market have flood with liquidity and there's a reason for the market to keep on going up. So any short-term intermediate retracement, don't be too frightful. We always look for an opportunity to buy. Why? Because the whole trend is still up. So basically, even as a short-term trader, my focus is always I try my best to do one direction because the main trend is up. When the main trend is up as a trader, we try to focus. Let me stay really focused, laser focused to buy on dips. That will keep our thoughts very clear. No? So instead of buying and selling, we try to buy on dips. Say, for example, this is an uptrend. So we should be looking out for any retracement, means moving down. It could be short term. So always constantly looking out for a buying signal. Say, for example, like this retracement. This is an uptrend retracement. So we always find a point. Is there a reason to buy now as the market come down? Because we are part of this major uptrend here. So for example, if you happen to identify a hammer, so later I'm going to give you send you a link where you can identify this hammer. It's another 1 hour program I did with CME Group, that how to identify a hammer that carries weighting. That means when you look at a chart, there's a lot of hammer, but how to select the hammer that carries strong weighting, that it's worth considering. So later I'm going to share with you the link. So before you come on board next Tuesday, you may want to spend an hour just to study how to identify that hammer with high weighting. So now, so apparently, if this is a 40 years old market, US has been going up for, no, not the last 100 years. Let me just make a correction here, that a lot of analysts say that, well, US market has been going up for the last 100 years. Is it true? No, it's not true. US market has been on an uptrend since 1980. 1980. So until today is about 41 years. Now we have this, say for example, is a 41 years old uptrend for the US market. And where should I place the US market? And all of us know that the reason why the US market is an uptrend right now is because of the liquidity, the QE in different term you may want to call it. But if I'm going to place this 40 years, where is a US stock market right now? I think it's around the high, but I cannot be specific. Is it going to come down anytime soon? But I think it's going to take the next few months or few years before we see any major correction. So as of now, it is still uptrend. And even as a short-term trader, I would advise you to keep your focus so laser sharp that buy on dips. That doesn't mean that you do not short, but since you're against the trend, we try to, if you happen to short, you keep it really short term. But the objective for short term trader is that you try to buy on dips. Let me just give you one illustration here is that I do have a chat group. You can consider to join after the coming Tuesday. So on this chat group on the 6th of March, now you still have to, maybe you still remember, it's still fresh in you that in the beginning of the year, beginning of March, the US market has been coming down. So a lot of the traders are puzzling what the US market have been coming down in such a magnitude. So on the 6th of March, we have studied that I say these are posted to the Telegram chat group. It says, I say that the US market has been moving south, means coming down. I analyze that the main trend is still up, and we all know that. Therefore, I view that the market as a retracement and looking out for a buy on dip with a measured risk. So I'm very focused, that we are very focused. Then I further say that the following case study demonstrating the biting point on buy on dips, which is hammer. How to study how to identify that hammer that has strong weighting. Now, this case study will be suited for those short-term trader. Remember just now how I qualified and profile short-term traders between holding 2 days to 3 months, not more than 3 months. As I studied into the 60 minutes chart recently. So this is a 60 minutes. Let me just zoom in back then on the 6th of March. What did we study? That means we recognize the whole trend is up. We basically are very focused, single-minded, where to buy on dips. Okay. Now, if you want to get active, that will be the intraday trading series. But coming Tuesday, I'm going to focus a lot about short-term trading. As you could see here, there's a hammer, which I conclude that is a hammer that carries weighting. So later on, please go and study the 1 hour video where I'm going to send to you shortly anyway. But before the hammer, there was a bullish engulfing body. Now, it doesn't matter if you don't quite understand about all this candlestick, I'll explain to you how it works. Now, so on the 6th of March, after that, this was the hammer and the bullish engulfing body. After that, 3 weeks later, and that's where we are today, about here, is about 33,000. Can you see that the strategy here? Now, let me just do a recap here is that first, even as a short-term trader, do your best to identify where is the trend right now. If the trend is an uptrend, even as a trader, we don't just buy and sell, buy and sell. We try to stay focused on buy on dips. So I just give you some highlight here. How to buy on dips is that you focus on those hammer that has high weighting. Okay, so I just want to give you a clear idea that earlier was a 60 minutes chart and this is a daily chart, how to identify trends. So basically you could see that these are the trough is getting higher. Okay, now where is 6th of March? So I'm very single-minded, very focused, and I hope you can do the same and you can do it as well. That as the market retraced at the beginning of March, you could see that we got to find a point. We zoom into different time frame, which is 60 minutes. We try to find a point of entry. That's coming Tuesday. I'm going to share with you in greater detail. And just beyond the short-term trading matrix, I'm going to share with you how to do intraday trading as well. Okay, so I just want to thank you, CME, that sponsored myself for this program. Also able to partner with Phillip Futures in Singapore and Malaysia. I'm totally excited to share with you this coming Tuesday. And this is what I'm going to share. And the first part I share about profiling, but the coming one I'm going to share with you the trading strategy between short-term trading and intraday trading as well. And I hope that you can prepare your questions. And during the question, I'm going to look at a chart as well. I hope that there's a more interaction there, that we can fully utilize the 1 hour on Tuesday night that we can have, and can have great exchanges. Okay, before I end, you can get yourself prepared for this coming Tuesday. Now, this program is free. Identified Market Reversal, which I also partner with CME Group, that I delegate about 1 hour just to focus how to identify the hammer that has high in weighting, very high in weighting, that we can is worth considering. Okay, so do visit this program before coming Tuesday. Thank you, James.
Okay, thank you, Conhao, for the sharing of the preview. Yeah, so let me share back my screen first. Yeah, able to share it. Okay, to clean the house. Okay, hold on. Yeah. Okay, I need to share back my screen now. Yeah, okay, thanks a lot. Thanks for the sharing, Kunhao. Yeah, so I actually this upcoming webinars is the part two. So we already have our part one on the 30th of the March, 30th of March. So if let's say you have missed out the first part of this webinar, you may go to our Phillip Futures YouTube channel, okay, to have a look on it, to watch it back, the recorded one, webinar. Okay, so we'll call it a day, Kunhao. Thanks for coming to our podcast, okay, as a guest to share about our upcoming trading webinars. Okay, thank you very much, Kunhao.
Thanks,
Good
James.
to
See
see
you
you.
on Tuesday. Yeah.
Okay, thank you. Bye bye.